Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Coming to market on Friday, we could see the fall continuing. In fact, there was a scare from Germany. We could see, concerns over Deutsche Bank falling, and the shares. Almost I think they fell by almost 15% on one day after some concerns over the liquidity came in, and that kind of pulled the market down, and we could see the Indian market also falling. The entire second half, the market fell, and finally, Indian market closed at its lowest point. So now it has closed decisively below 17,000, and if you see, of late 17,000 has been multiple times broken, which means that 17,000 level is kind of losing its importance in terms of support. So now the next major support is coming in only at 16,800. That is a major support, but of course there will be some volatility in between. So now this week is going to be a shorter week. The expiry is going to be faster because this week expiry is on Wednesday, as Thursday is a holiday for Ram Navami. So what happened after whatever the market closed on Friday is something very important to know. So if you see after Indian markets closed, the US markets also continued to fall, but then finally they recovered and closed in the green. So that positivity is something which is kind of giving a global positivity, and we could see SGX Nifty trading in the green, and a big gap up was expected. But then what happened this morning is something even more surprising. In spite of the US markets closing in the green, and even the Dow futures went up this morning, but then if you look at Asian markets are still not recovering. In fact, they are in negative, most of the Asian markets. So as we speak, I am looking at the market. In fact, SGX Nifty, which was much higher, has actually kind of toned down its gains, and looks like the way things are going, we might see a flat opening. So if you look at SGX Nifty right now, it's trading at 17,072, which of course could probably be a small gap up or a flat opening only, not a big gap up expected. But if you look at the Asian markets right now, Japan is trading slightly positive now after a fall, and Sydney, Australia is flat, and if you look at Shanghai, and it's negative. Hong Kong is negative by almost 1.85%. Korea is down by 0.35%. So overall, I would say it is a slightly negative-ish kind of trend in Asian markets right now. So what is happening with the banking stock is something that needs to be seen, because right now the major pressure to Indian stock market is coming from the banking stock. We could see kind of every banking stock coming under pressure. But one good thing in this is what we discussed yesterday in the meeting. That is when RBI has taken a report from other banks in India on their bonds situation, and things are kind of looking good, is what I understand. So India as a market, this is something that we've been iterating earlier also. India as a market doesn't look like it is in a weaker position, but then the global negativity is of course holding back Indian markets as well. But then, as we've discussed earlier, and as I've told earlier yesterday also, there is but no reason for Indian market to actually cheer and start moving upwards again. So with the global weakness continuing, the Indian market is only expected to kind of consolidate, and with volatility of course, and probably I'm looking at more of a sideways kind of movement for next few months. Until at least the two major events which could actually change the trend for the market could be: one, when the central banks finally think of stopping to increase their rate hikes, or two is for India specific market, new stable government. So as the elections are due next year, so there will be that kind of holding back the FIIs investing into Indian market. So until that is kind of settled, I don't see any major turn in Indian market. So till then, it could be just a up and down kind of sidewise move, which can be expected, of course, with volatility, because the market itself is looking bearish. So the bank stocks are going to be majorly in focus again. So will the banks finally support? In fact, if you look at as of today, two sectors which are completely in oversold zone is the IT sector and the banking sector. So if any of these stocks actually see a short covering, we might see a rally in the market, but then that may not sustain for long. So as on today, the way the markets are, it's like every rise is getting sold into. So there might be people thinking of again selling. So if you look at for this week, it's just a 3 days left for expiry. And in this 3 days, I would say the range that I'm expecting the market to kind of close is 16,700 to 17,300. So this, of course, looks slightly broad as on today, but then probably we'll close in on the range by tomorrow. But as of today, 16,700 would be a safe range to be trading on the lower side and 17,300 on the higher side. So this is what is expected in next 2 days in spite of even if there is a short covering as such. So let's see how the market actually changes. This is last week of this financial year, and on Wednesday this financial year closes and the next financial year starts. So that is something that will be actually creating more havoc in terms of volatility. So there will be a lot of long-term expiries which can actually take a hit there, and probably on Thursday the day can be really very volatile. And definitely, I would not suggest anyone to even trade on Thursday. So that was, sorry, not Thursday, it's Wednesday this week. So because the last expiry of the financial year generally is volatile. So that's it for now. I would say the major focus would stay on banks. So this is as far as the trader is concerned, but as far as the investor is concerned, this is a good time to actually accumulate good stocks in the banking sector. So do shortlist on your good banking sector stocks and probably start investing in SIP mode. And similarly, IT stocks can be seen to add to your portfolio, which could give great returns as the markets recover. So that's it for now. This is Srikanth. I'm signing out, but before we leave, do remember to press the like button if you love the content that we share. And do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye. Have a great week ahead.